Welcome back, Freedom Savers. I hope you had a fantastic week. Mine was pretty decent. Oh, and one more thing that I wanted to bring up that's happening in my life, or did happen in my life, I should say, is I did mention previously that I applied for a new position at work, which would have been a promotion. I did actually get offered that position. Unfortunately, they offered me a night shift, and I did not want to work nights, and they were not willing to pay me enough money, which I found interesting because they're just going to pay someone else the amount that I was asking, and it's going to be the same amount coming out of their budget. But it's all good. I did not depend on getting that position, and I knew that there was a very high likelihood of me declining that position. So that's what happened. I just want to give you guys an update on my job, on the job that I applied for. So yeah. Today we're going to do the 100 stock Roth IRA update for this past week. Our current value is $6,206.15. The current cash in this portfolio is 42 cents. Now, the thing with this portfolio this week is I've actually sold stuff and bought stuff. That is a first for my Roth. Well, not a first, but it's the first in a long time, and it's definitely the first for this year. While I thought I was investing entirely in United States stocks, I was not. So I've made some changes. And as you know, last week I sold Garmin and a couple others in one of my other portfolios. So turns out that I also had a few in the Roth that I was not aware of. And I don't have a problem with having foreign stocks in the Roth as long as the tax treaty between the United States and that country is a good one. Unfortunately, Switzerland and that area, I'm not so impressed with that tax treaty. It makes it kind of a pain in the butt for the investor, just because the broker or someone has to file paperwork ahead of time to prevent the taxes from being so high, and then they still take taxes, and it's, I don't know, it's too much that I don't want to deal with. And I'd rather just invest in United States companies to not have the problem at all. So the exciting news is I did get rid of 5 positions, and I replaced them with 5 positions. So we still have a 100 stock portfolio. So let's get into it. Right now the value is $62.0615, and I've deposited $61.45, which gives me a $61.15 profit, or 1% gain. I think a lot of this, even though the market has been down this past week, I guess overall the week was up. Anyways, it's been a rocky week, and this portfolio has done very well and outperformed it. And I think part of that is due to me selling stocks at a profit. If you look at it overall, I supposedly lost $8 or $7.99 selling these stocks. But I think the prices may have adjusted before the sell, and I may have turned out better than this. I don't know. Anyways, long story short, the Roth is up, which is awesome. And these are the stocks I sold. So I sold PNR because it was a UK stock, because I just decided to go through the Roth and get rid of everything that's not a United States company or Canadian company, because I know the tax treaty with Canada and how it works with the Roth is pretty awesome, because they don't take any taxes if it's in a retirement account. Anyways, long story short, I got rid of PNR. I got rid of Medtronics because Medtronics was in Ireland. I decided to get rid of EIX, which is Edison International, which is a utility company in California. With the law that California has for liabilities on utility companies when they start fires, it's not that advantageous, or how do I put that? It increases the risk of investing in a utility in the state of California, as we can see from PG&E. Now, PG&E, of course, you know, I invested in my no rules portfolio just as a gambling move, and it has paid off so far. We'll see how it works out in the long run. But that was a risky and just stupid move. It's just a gamble is all it is. I'm gambling on what will happen in the future. It's 100% speculative. It's nothing, it has nothing to do with a true investment, right? The risk of investing in utilities in California is much higher than in many other states. So I have chosen to go ahead and reduce my risk from that by selling Edison International. I did sell it at a loss as far as I know. I'd have to go back and actually check the exact numbers. But the day that I put the sell in, which was the day prior to actually selling it, I was down $5.74 on that position. VVC. Now VVC merged with Centerpoint. And so that's Vectren. Vectren merged with Centerpoint. And they were paying out supposedly $73 per share. And they're just giving cash to the Vectren people. They weren't like giving any stock of Centerpoint or anything like that. So that was already happening. But it was sitting in my portfolio, so I went ahead and put it as a sell. Well, it didn't actually sell when I told it to, but once the merger went through, it did finally sell. I don't know how far out ahead I came. The day I put in the order, which didn't actually go through, I was up by 57 cents. But they actually paid out more than $73 because the stock was actually up. I believe I got like $73.99 or something like that. I also sold Chubb. Chubb is an insurance company that is based out of Switzerland. I thought it was based out of the United States because I did not do my research properly, apparently. So yeah, these are my mistakes when I built this portfolio, and I thought I was investing in United States companies, and I was not. So that's one thing that I've made the mistake of in multiple portfolios, and I have now fixed, I believe. Actually, I know I have, because I've gone through all of my stocks in all of my portfolios and ensured they're United States. So Greg, if you find another company that I own that is not a United States company, other than my Canadian companies here in Roth, please let me know, as you always do, because you're amazing, dude, and I highly appreciate you pointing these out to me. All right, so what did I buy? Well, I bought Canadian banks. So as you know, I already had 2 Canadian banks in my portfolio, and I decided to buy the other 3 major Canadian banks. And that's because the top 5 Canadian banks in Canada have paid dividends for over 100 years, so over a century. All of them have. All of them, all 5. Unbelievable. And their banking regulation is stricter, or how do I put it? It's more beneficial for investors and for the financial community, really. So they're doing really good with their financial regulations and their banking regulations. So yeah, that's pretty awesome. So they are great investments as far as I'm concerned. And so I went ahead and I bought BMO. BMO is the longest running dividend paying company in all of Canada. And that's all companies, not just banks. Their policy is to pay out 40 to 50% of its earnings in dividends to shareholders over time. They have paid a dividend for 190 years straight. They have not missed a dividend payment in 190 years. We're talking almost 2 centuries, guys. That's insane. If you want to invest in a company that has safe dividend payments, I would dare say BMO is the one to go with. Let's jump over here to RY, another Canadian bank. They have paid dividends straight for 149 years. And the third Canadian bank I added is TD, which has paid dividends for 161 years straight. I mean, you cannot beat these numbers. What other companies have done this? This is insane. So yes, I want these in my Roth, most definitely. And their dividend rates are not bad at all. All right, so BMO's dividend is currently at 4.17%. RY's is at 3.85%, and TD's is at 3.6%. So not too bad on those dividends. I like it. The other companies I purchased is Texas Instruments. They do capacitors and chips and electronics and that type of stuff. And they have a dividend of 3.03%, which is decent, very nice. And they have paid a dividend for 57 years now. And not only have they paid a dividend for 57 years, they've also grown that dividend year over year for the last 15 years. And so that includes going through the 2008-2009 recession. So that's pretty awesome. UGI is the other one I added. They do propane, gas, electric. They ship propane and they actually provide it through pipelines. Anyways, they only have a 1.84%. Actually, I think it's higher now. If we go look at UGI here, if I can type it properly, 1.99% yield. The reason I wanted them is they have paid a dividend for 134 consecutive years. Not only have they paid a dividend for 134 consecutive years, they have grown that dividend year over year for 33 years. All right, that combination cannot be beat. It's amazing. Like these Canadian banks, they do not necessarily grow their dividend every single year. Now, a couple of them have grown for the past 3 years, past 5 years, whatnot. But the thing is their dividend is just based off of their income, and it varies up and down. They are not trying to grow it each year. It may be large this year, it may be smaller next year. It doesn't matter though, because it's consistent. At least you know you're getting paid a dividend. UGI has the bonus of both of those worlds, because 134-year history of paying dividends is amazing, and 33 years of growth is also amazing. With 33 years of growth, if they've only paid a dividend for 33 years, that would be amazing. But no, they've paid a dividend for another century over that. So anyways, I think these are awesome additions to my Roth, and I'm very happy to add all 5 of them. I know a few of you were wondering what positions I would add if I had space open. Well, these are them, guys. All right, let's get into the rest of the update here. So that's the biggest news in this portfolio. Dividend-wise, I've earned $47.96. I've been paid $11.62 in January and $4.08 in February. Total of $15.70 in 2019. And as you can see, I got them all tracked right there. Sell activity, you can see what I sold. I sold Chubb, I sold Edison International, I sold Medtronics and Pentair, and Vectren did that merger and automatically sold. And so I got like, anyway, you see it, you see it, you see it, you get the point, you get the point. Let's not run on. All right, dividend changes, there has been some, and you know, I get pay raises from these dividend changes, which is amazing. Love the dividend growth. So ADM increased their dividend by 4.48%, or 6 cents. Aflac increased their dividend by 3.85%. Cincinnati Financial increased their dividend by 5.66%. And 3M increased their dividend by 5.88%. So a lot of raises this week. I'm happy with getting pay raises. Let's go to the yearly. As you can see, the 5 positions I added, I've got in green over there. I've deleted the others. Overall, the portfolio is, I'd say about 50-50, green and red. There's been 5 investing days. I invested my normal $119, which is $23.80 per day. The increased income for this week is amazing, because it actually increased my yearly income by $6.32, which gives me a yield on cost of 5.31%, which I believe is the highest I've seen in the Roth so far. It increased us. We broke the $200 mark, so we are now getting $203.92 a year in dividends, which divides up to be almost $17 per month, giving me an overall return on the portfolio of 3.32%. Graphs, if you look at the new diversification, nothing's changed too much. You see the financial area went up with all my Canadian banks. And yeah, everything else is pretty much the same. Nothing's really jumping out here. Dividends paid. You can see December was my biggest month, and then it dropped a little in January, and so far in February I've only got 408, but it's only 9 days in, or 8 days in, something like that. So yeah. Stock weighting. Why are these so high? Nucor and Texas Instruments and Coca-Cola. That's interesting. That is not right, guys. That is not right. I have numbers way incorrect here. It says the value of Texas Instruments is $1,993. Oh my God. So, yeah, I'm not sure what's up with that, but the value of, this is imported straight from Google Finance, TXN. Let's go to Google Finance, because this is not cool. Texas Instruments on the NASDAQ. It does not find it. And this is a problem I had yesterday when I was updating my portfolios. For some reason, certain ones are not being found. And I don't know why. Google Finance is having some problems, man. I mean, these popular companies on popular exchanges are not being found on Google Finance for some unknown reason. It's ridiculous. I mean, obviously, Texas Instruments is nowhere near that price. Texas Instruments is only at $104.55, not $1,993. So I do not know what that is about, but you can disregard that. It doesn't affect the actual yearly income, so those numbers were correct, because it just takes the dividend by this number of shares to find out how much I'm paying or I'm getting. But this is just for my gains and losses, and this is obviously not correct at all. That's not correct, obviously, so we're going to disregard that. And I'm assuming Nucor and Coke are probably the same situation. Yep, Nucor can't be found. And Coke can't be found. But you know, it's funny because if you look up something else, like 3M, it works just fine. So there's a problem with Google Finance. Anyways, this is not correct because Google Finance. So there you go. That is the Roth update and the big changes in the Roth update. I'm actually very happy to swap out these companies with these companies because I'm really excited to own these companies with this type of history. That's just amazing. Amazing, guys. I'm just so excited to have these companies. I really am. Screw these companies. Get rid of them. They're out of here. You're out of here. You're yesterday's news. All right, guys. That's all I got for the Roth update. Thanks for watching. See you in the next video. Alright guys, thanks for watching. I appreciate it. Be sure to hit that subscribe button down below, and if you liked the video, hit that like button for me. If you want to hear any specific type of information, anything that you're interested in, you have any questions, just drop me a comment down below. Let me know what you think. Let me know your opinions on this video or any other video I've made. And if you know anyone else that might be interested in this video, please be sure to share it on your social media and share the knowledge. Thanks guys.